Most students think payroll and employee earnings is hard until they see it explained like this.
Welcome to this explainer. You know, if you're a small business owner or an entrepreneur, you already know that managing a team is, well, it's incredibly rewarding. But let's be totally honest here. The second you sit down to calculate payroll, that massive headache of compliance and formulas can instantly set in, right? You want to pay your people fairly and accurately, obviously. But that whole administrative maze of taxes, percentages, and regulations, it can feel completely overwhelming. Well, take a deep breath. Today, we're taking that payroll anxiety and transforming it into a clear, absolutely foolproof system. We're going to dive right into the practical accounting skills you actually need to calculate exactly what your employees earn, and more importantly, what they actually take home.
Here is the roadmap for our journey today. 1. The 3 payroll pillars. 2. Gross pay and overtime. 3. Sorting out deductions. 4. Calculating final net pay. And 5. Avoiding common payroll pitfalls. All right, let's jump straight into Section 1, the 3 payroll pillars, the foundation.
Before we get totally lost in the weeds of percentages and tax codes, we really need to understand the foundational blueprint of our payroll journey. And I want to reassure you here, this complex administrative task, it literally just breaks down into these 3 simple, super manageable pillars. Step 1 is calculating the gross pay. That's what the employee actually earned. Step 2 is identifying deductions, so the money that legally or voluntarily just has to be removed. And Step 3 is calculating the net pay, the actual cash your employee takes home. It's absolutely crucial to distinguish between what an employee earns based on their hard work and what they walk away with after obligations take their slice. Master this 3-step sequence, and I promise you, you've mastered your payroll.
Moving right along to Section 2, gross pay and overtime, what employees earn. So, let's examine what an employee actually earns before any obligations are removed. When we're calculating earnings, there's a very strict definition of overtime. The sources define it specifically as hours worked in excess of 8 consecutive hours per day. This is a massive threshold to keep in mind. The exact moment your employee works that 9th consecutive hour in a single day, they cross right over from their regular pay rate into overtime earnings. Recognizing exactly when this shift happens is basically your first major responsibility in accurate payroll accounting.
But to actually pay for those extra hours, you first have to capture them accurately, right? You've got to analyze your source documents, things like physical time cards, time books, or electronic clock-in records. You'll separate those overtime hours from the regular working hours, calculate the specific earnings for the extra time, and then combine them right back with the regular hourly wages. That combined total, that gives you your gross pay. Gross pay is the grand total, the absolute maximum amount earned before anything whatsoever is subtracted out.
Let's look at Section 3, sorting out deductions. What must be removed? Moving logically to our second pillar, we need to sort out the necessary subtractions from that gross amount we just found. Now, the crucial point here is understanding that not all deductions are created equal. They basically fall into 2 distinct categories, and you absolutely need to know the difference. On one side, we have statutory deductions. These are compulsory. They are strictly required by law. Think of income tax and national insurance or Social Security. You, as the employer, are legally obligated to withhold these. There's no way around it. On the other side, though, we have voluntary deductions. These are not required by law. They're taken out specifically at the employee's request. And honestly, you'll likely encounter a pretty wide variety of voluntary deductions. This includes stuff like trade union dues, personal insurance premiums, mortgage payments, credit union payments, contributions to a private pension plan, or even a company's social fund. As an entrepreneur setting up your payroll system, you've got to be prepared to facilitate these. But remember, unlike taxes, things like insurance premiums or pension contributions only happen because the employee specifically asked you to deduct them from their gross pay. All right, on to Section 4, calculating final net pay, final take-home amount.
Now let's bring all this math into reality and see how these 3 pillars work in practice. Meet our case study, Amos. Let's walk through the exact variables of this paycheck. So Amos worked 40 hours this week at a rate of $7 per hour. For deductions, we have a fixed income tax of $20. We also have a national insurance deduction, but notice something here. This isn't a fixed dollar amount, it's a percentage, specifically 5% of gross pay. These are the exact numbers we're going to run through our 3-step formula.
Step 1. Calculate gross pay. We take those 40 hours worked and simply multiply that by the $7 hourly rate. That gives us $280. This is our gross pay, the big number. This is what Amos earned on paper before reality sets in. Now, keep this $280 figure in your head because we are definitely going to need it to solve our percentage-based deduction.
Let's move to step 2 and see how this builds our total deductions. First up, we have that fixed $20 for income tax. Easy enough, right? Next, we have the national insurance, which is 5% of the gross pay. So we take 5% of our $280 gross, which equals $14. Now we carefully add our deductions together. The $20 tax plus the $14 national insurance gives us a total deduction amount of $34.
Finally, step 3, calculate net pay. We take our initial gross pay of $280 and subtract our total deductions of $34. That leaves us with $246. And that concludes our mathematical journey. Notice the contrast between that initial big number of $280 and the $246 net pay? That $246 is the final take-home amount. It's the actual cash Amos is going to see hit their bank account.
Let's wrap up with Section 5, Avoiding Common Payroll Pitfalls, Preventing Costly Mistakes.
As simple as that 3-step process seems, the execution is where costly errors happen all the time. When studying payroll accounting, there are 3 mistakes that trip people up over and over again. First, applying percentages to the wrong total. Honestly, this is the most dangerous mistake you can make. If a deduction like national insurance is 5%, you absolutely must apply that to the gross pay, unless explicitly stated otherwise. Never, ever apply it to the net pay. Second, forgetting to add all the deductions together. Sometimes you might subtract the tax but totally forget the percentage deduction. You've got to sum them all up first. And third, mixing up gross and net entirely. Always remember, gross is the big number, your total earnings, net is the smaller number, the cash actually received.
To avoid these pitfalls, just follow this golden rule. Show your work. Always write down the formula. G minus D equals N. Gross minus deductions equals net. Keep your steps organized. Check your units. Make sure you're actually converting percentages into actual dollar values before you try to subtract them from the gross pay. I mean, you can't subtract 5% directly from $280. You have to find that the 5% equals $14 first. And finally, practice keyword spotting. When you see a word like statutory, you instantly know that is a compulsory deduction that absolutely must be subtracted to stay compliant with the law.
You know, the way you handle payroll really says a lot about how you value your team and how you run your business. The math might seem a little tedious at times, but it is literally the bridge between an employee's effort and their livelihood. So I'm going to leave you with this thought to ponder. Your gross pay reflects their hard work, but are your deduction calculations ensuring their net pay is fair and compliant? Take a hard look at your source documents, double-check those percentage calculations, and just make sure your 3 pillars are standing strong. Thanks so much for joining me for this explainer.
As always, the link for this study tool is in the description below. Let me know what you think in the comments.